Hey there, how you doing? Welcome back to the channel. So today we'll do a little stock update. Not too much, not really too much going on, except for the high beta stuff. So I'm just screwing around with this game for a bit, um, for the hell of it. Let's see what we got there. Let's see, I have to make some more. Take this iron ore and have to get it converted over. So let's see, I need some lava, right? Yeah, I need some lava. Okay. Okay, I have 3 lava buckets. I could use 2 lava buckets. I could use more. Let's see, let's go get lava from over here. Actually, do I have lava in here? No, I do not. I don't want to go too many times. Let's go like this. Okay, go like this. Let's make a couple more. Okay, a couple more buckets to get some stuff. So I think it's kind of interesting. We'll see this week how, it looks like the yields on the bonds have settled down this week. And there was, it's interesting. I was, I think that, like I've said before, like the really the linchpin in this market, like which can really honestly just keep going up for like ever. I mean, the only risk to the system right now is really just the leverage, right? So people are over levered, and so you had that hedge fund blow up and stuff, and there'll be more of that. And the question is it a case of that people are too over leveraged? So they probably are. But what's interesting right now is, and this really goes to like Kevin was talking about, so the Meet Kevin dude, and he may kind of be onto something here. He was talking about how, he's speculating that, hey, they're deleveraging right now, and that's why the high beta stocks are getting hit. So any high growth, high beta, high multiple stock, which we'll go through the charts, but like as I've been, showing, like the high beta stuff's been getting kind of, had a lot of sell-off and stuff, although it recovered somewhat recently in that, we had a little bit of finally got a bid under, under the NASDAQ, but it was really the large tech where we got the bid. So under there, we got finally a little bit of recovery, but yeah, but like the smaller cap stuff is, just, yeah, they kind of be getting, kind of beat up. And so, in a way, like it would be healthy for sure for the market to be deleveraging somewhat. And it'd be interesting if they're deleveraging, out of some of these high growth, the EV space and some of that stuff. It's kind of interesting if they pull out of that. That probably would be better for the market. But the one linchpin in the market is really going to be inflation. So the question is, and we'll show that is like this week we've seen that like some of the, at least the interest rates have kind of really cooled off here. So that kind of implies that, there's less of a worry about inflation. But, that is the one problem that you have is the inflation. If it's the one thing the Fed really can do nothing about, the Fed cannot control inflation. If it gets out of the bag and gets out of control, they really can't stop it. Now, of course, everyone at the Fed will say, oh, no, it's not a problem. They can stop it. But they really can't. If you go back to Volcker and what he did in his Saturday, I think it was the Saturday Night Massacre, he just like cranked rates up. I mean, he got them up to something like nearly 20%. And he cranked rates up. And he did that, remember, this was in Reagan's term, and this was after the 70s where we had very high inflation. So we had this high inflation throughout the 70s, and Volcker had to come in, to break the back of inflation. How did he do that? He cranked up rates into what we would consider, apocalyptic levels. He put rates, how a mortgage with 14%, 15%, 16%. these are values that, like, hey, our economy would just not be able to handle. I mean, what would happen to the price of houses if, a mortgage went to 12%, much less 18%? That would be like, okay, houses would come off really, really fast, right? Because no one can afford the mortgage, right? And because of the amount of debt we have, that's what the issue is. But what it would do is it would cool things off. It would strengthen the dollar, and it would strengthen demand for the bonds, which would, have a different effect, and it would cool off inflation. So that's the one thing that they really lie about. They really cannot control inflation. So that's why the market seems to be focused on it, right? Because the one thing is, like, the Fed says, oh, it's no problem, no problem. But, the market knows that no, they can't do anything about it. So basically, if, if inflation is transitory, like the Fed is saying, then okay, that's fine. Everything's great. Everything's cool. But if it's not, then it's a real problem, because it will get out of control, and the Fed won't be able to do anything. I mean, they just won't. Now, there was an interesting one on the Bond King. I don't know if you guys listen to that channel, Van Meter, his channel. He had this really, I think the leading prices paid. So peak and prices paid tend to lead by 2 months or so the inflation. And there's some preliminary indication. Now, it's very subtle, but like that the prices paid, PPI or CPI, the prices paid, it's like it may have peaked. Now, it's a little too early to say, but it's possible it may have peaked, or it could be peaking. And if that's the case, and if the CPI follows it, then that could be an interesting thing. So if that's true, you can kind of see that would be like an all clear for the market, right? Because now it's like, okay, the one thing that the Fed can't do anything about is inflation. The one thing that they're like, oh, they're in trouble if inflation got out of hand. But if everything else they can handle. Any other more financial institutions going bust, no problem. Just like stuff their balance sheets with bank reserves. I mean, that's what they do. Hey, some banks go bankrupt or bust, no big deal. They just merge them with a bigger one. It's really not a big deal. They can handle all that stuff. But the one thing they can't handle is inflation getting out of control. So, so that's going to be the interesting thing. So let's go take a look at that and kind of see what's going on here with the market and all that stuff this week. And so if we look here, it's a tale of two markets, I guess. SPY just, solidly up this week, and just in one heck of a just running bull market right now. So it's like, it's just sort of like no big deal, kind of just some kind of a just, channeling up, just, what's the problem? There isn't any. So it's all good there. And then if we look at something like our XLP, consumer staples, this one has stalled a little bit, but it did have a breakout day today. That's kind of interesting. So I'm not sure what's up with that. But then we look at the NASDAQ composite. And what this thing does is, this had the correction. This had the big correction, but the NASDAQ composite is, broken out. And now it's kind of doing good. It has a down day here, but, it's on its way. It's sort of returning to its uptrend, but these are the mega caps. So these are the Apple. These are, see, like Apple had gotten beat up, and then it probably due to Apple. Let's see, like Microsoft, probably not Intel. They're kind of, well, but some of these big caps, maybe the Googles in there, the big cap names, or the mega cap names. So, that part of the market is doing like hunky-dory. So then the Treasuries yield on the 10-year. See, this came off this week. So it's kind of, the yields have come off this week. So that kind of relieves the pressure, inflation worry kind of pressure in the market. And then going to the weekly, you see that it came up and it really finally found this resistance in this area. And it's really kind of turned the corner for now. Now, as I said, so this is a big weekly chart. So this would be something where you do have an uptrend in place. These two bars don't, negate the uptrend at this point. So, it's possible it comes down into the moving averages, cradle and go up, but definitely, it definitely stalled its advance for now. So, that's it with that. And then the dollar really got weak, I think. So, yeah, so the dollar had gotten weak in here. And, the dollar had, been really weak here. And then really it's kind of like bottomed out and has this little reversal going up. So it's still kind of reversing, but it's definitely weakening here. So, it may, the dollar may go into just a big consolidation range. You never know. I mean, it could do something, just some kind of consolidation range or something like that. So I think that helped out the market too this week. And so that's good. Let's see. And then, so really it's like what's going on with like then the high beta stuff. See, okay, so if we go to our, like Tesla, I had pointed out that this kind of busted out, it broke out, but see, then at the next day, it kind of just totally gave up most of the gain and it flattened. So it's a very kind of, so it's definitely like like, so you had a big breakup day this day, and then this day it kind of gave it up and went down, and then it's kind of like, okay, floundering around. So you had an accumulation day, but then a big distribution day following. So it's a very weak breakout. But either way, if we look at it, as it stands right now, you are above this above the 50 now. And so even though it's kind of weak, it kind of achieved the purpose. It didn't really run though. So that's what can happen with these things. They can have a strong day and people can get hooked into it and stuff. And I pointed out that this was, potentially a nice setup for swing traders, not trading advice, but and it kind of worked out for an intraday, but I would have expected it to go more, but it didn't. It didn't. So if you had, depending when you had bought on that day, if you did, maybe you're still positive. Are you waiting? Maybe. I don't know. It depends what you want to do. Maybe they'll come back around to this. But then some of our other ones, like the Neo, see, this guy's already gone back down to the lows. So these like Neo is like, it's really kind of dog meat. I don't know. You can draw your trend line anywhere you want to draw it, but it's definitely kind of downtrending. Now it's kind of got this, what would be, not sure, I think a descending triangle. This pattern, this is not a reversal pattern. It's unlikely. So we have a double W. So you could say, well, okay, if it breaks out above here, but first we have to break out above here. So if we can somehow hold this support, right? There is support there, right where it's at now. If it held it and then broke through here and broke through here, you could really turn the thing down. But right now you're still in this downtrend, and I would not be surprised if this thing did a kaplooey through there, because if it breaks through that support and isn't able to hold it, then people are going to be holding the bag. So that's like, once again, like a technical analysis, no one can tell you anything. No one can tell you anything about what it's going to do. Just kind of give you the setup and kind of the margin, kind of the setup, and try to bound your risk. Like if you were buying this and trying to go long, you could bound your risk and say, hey, look, if I'm really wrong, if it breaks below this 34 area, right? So you can limit your risk and say, hey, I'm wrong. Because so the way it sort of might work is you would if I look at percentage change. So if I look, here, this move down was minus 45% in Neo, right? And now it consolidates. Now theoretically, if this consolidation, it breaks to the downside, then you could expect another 45%. Move down, something like that. That would be like the first target for it, possibly. So it's interesting because it looked like the NASDAQ recovered, but look at Enphase, like a lot of these high tech, high beta that had done so well are really actually looking really crappy now. They really have not broken out above the 50. They're stuck below the 50 right now. So they're actually looking really bad. Arcimoto looks like dog poo. GMA is holding up still, and Tesla in a way, Tesla leading the pack, and then oil. Look at our oil kind of found a bid there. So an XLP doing that, XPEV, and this guy, yeah, this guy looks like crap too. You know, and looking at this too, I was looking at it before and like, okay, similar kind of setup. If this thing can, you know, break above this area of resistance and break, you know, above the 50, you know, just like Tesla, it has that potential. But instead of doing that, it's this thing right here. It ended up really, really breaking down, like right here, broke down, here broke down on increased volume too. So it's making a run at this, you know, at this support area here at about 30. So that would be an area to watch out, you know, whether it's going to break through there or not. If it breaks through there, maybe there's some support here. But then after that, it's pretty much free. So that's always the thing. It's like, it's these things, if they go up and they don't have any undulations on the way up, and they have nowhere to find support on the way down. So I think that's it with it. I would check out the video from the Bond King, because that's really interesting. That's an interesting setup, because if it turns out that the price is paid from is sort of leading the actual inflation, and if it has peaked, that could be a really good thing, because if we had, you know, in terms of for the market, because that could create a situation where, hey, you know, if the yield goes down more, and that could at some point, maybe it could turn back into making things like Tesla and all those tech stocks want to run, you know, so this would be the small cap tech instead of what the NASDAQ is. When we're looking at the NASDAQ, we're looking at the mega cap tech, which is so different. So mega cap tech, you know, found some support here. So I think that's it with that one. Yeah, I think that's going to be it for this.